So the plan for today's webinar is I want to go over some trades that I took, give you a breakdown, maybe explain and lay down my thought process as well. I think that's always quite helpful. And of course, if you have any questions, we can cover those as well. You can prepare them. I can take a look at current charts, which I'm looking at right now. We can analyze the charts together, top down right now, current ones for the remainder of the week, although it is Wednesday. Friday is a very big bank holiday in many European countries. It's also NFP week. So interesting mix between the Easter holiday and the NFP week. But again, we just take it one day at a time. And yeah, that's the plan. So let's just take a look at a few trades that I took, and I will just go through them. If there are any questions coming up, just jump in and yeah. So I will just go top down. They're not necessarily in the order that I took them, but I will just follow the list here. So Aussie yen, we talked about this a little bit in the Discord trade earlier this week. So you can see Monday, this is the daily chart, and I will go top down. Daily chart, we arrived at the moving average. We are trading, this is the 50 from the daily time frame SMA. I just like to use it as a long-term trend filter. It acts really well as support and resistance during trending markets as well. So we're in a trending market, then the pullback occurred right at the moving average. Then you can also see we started, we didn't have a lot of bearish momentum. However, I was looking for a short bounce. And because you can see the recent, 1, 2, 3, 4, 5, 6 trading days were quite bullish, I was not super confident in stretching my target too far, although you could say this is a with the trend trade because we are overall in a downtrend. The last 6 days of bullishness made me a little bit cautious. And this is then reflected in how I will stretch my target and how far I will go. So what we have on the lower time frame is a very clear pattern. We can go to the 30-minute, and we have here a really, really nice pattern overall. So you can see we have this top, then the market here overshot this top slightly, but the reaction, how the market reacted to overshooting this top was really interesting. You can see this very large red candle in the market right after we attempted to break out. So that was the first interesting insight that there might be some bearishness building. And with the context of the fake out, even better. I also drew the zone here. You can see it's a previous high. And then also there is some agreement on this level. It's not a clear single line level, I would say. The most horizontal levels are not clear single lines. So it's usually a kind of a zone that we're looking at. But what I saw is that then we had the breakout. I didn't trade the breakout here. I waited for the market to pull back inside the pattern, which if you're doing the course, we call it dirty retest, liquidity run. There are many ways and names around it. If you look for other content creators, other traders in YouTube books, this is called the 1, 2, 3 pattern. Oops, let me move that. So you have the 1, then the 2 usually is the one in the endpoint of the trend wave, breaking the last low. Then 3 is the lower high here that we are having. So we are trading back inside the pattern. And what is really interesting then, and what got me in, is the reaction once we saw more bearishness in the market. So the key to trading the good dirty retests is the acceleration of the bearishness. In case of a bullishness, you always want to see the market get out of the pattern, and ideally you want to see it happening with strong momentum. So the stronger the reaction that we get, the better it is. I don't necessarily need the market to clear the low here. So I don't wait for the market to make a new lower low or higher high in case of an uptrend, obviously. But what is very important is that you see strong bearish momentum come in the market. And that is a good indication that the move here inside of the pattern is not something that is too worrying. And then this got me in. I took the target down here. I saw this as kind of the origin here, kind of a supply and demand area, right? Get rid of this supply and demand area that started this move. So I wanted to target the level here a little bit above this area. Gave me a 3-to-1 reward to risk ratio, the stop loss above the candle here that I identified. You could have also moved the stop loss above the high here, but since this is already kind of a retest, I don't typically expect the market to make another retest. If it does, okay, you get out, or you are taken out. You can get back in if some opportunity arises. Mainly meaning that the market is going to go short or going to go bearish again with strong force. And then, yeah, still 3-to-1. Obviously, with hindsight, we know that there would have been a lot more to be had. But as I said, at that time, when this happens, this is happening right here. You can see when this candle is just building. So we just have the strong Monday bullish candle. And yeah, we don't have a lot of information of the higher time frame that is telling us there's a good bearish indication. So we don't have deceleration or anything like that. That's my rationale for why I didn't stretch my target further. Yeah, and I think 3-to-1 is still a very, very decent outcome. But yeah, that's how I played this one. British pound Aussie, this was, I'm not sure, a personal mistake, I think I would say. So I went short. I had here's the daily. You can see we had here the high here. We broke, we had here a lower bounce, broke above it. And I was thinking maybe this could turn into a long-term fake out. I was completely wrong. Obviously, without the benefit of hindsight, it's impossible to know. But I saw here, if we zoom in, you can see we had those weak highs. So we had the high here, and then you can see we have a pin bar, inside candle, another pin bar, taking out the highs. So I thought, okay, there is some indication that we have some fake out activity here going on. Yeah, I went short. You can see here, oops, we can go to the 1 hour as well, but the entry was on the 30-minute. But yeah, we don't, on the 30-minute, if I pull it up here, it's a little bit hard to see. So the entry was here on the 30-minute candle. This time I got in on the breakout. We had a really nice, here you can see this is the fake out component, really, really nice overall setup. I think justified to get in. Yeah, with the benefit of hindsight, maybe I would have been better to wait for the market to take out the high, because on the daily time frame now it looks like resistance is turning into support, and we are here with the lower high looking more like a cup and handle, right? But yeah, happens. I think overall not a bad trade, just yeah, not an optimal one, but I think overall still okay. I did move my stop loss because yeah, I was not really in front of my screen when that happened. So yeah, nothing to be done. I think it's overall still a fair trade, maybe not the perfect one, not the greatest one, but I think overall still decent. Another one, and by the way, if there are any questions coming out from you, just put it in the chat. Very happy to go over any questions. So just jump in. Yeah, don't worry about interrupting. I'm here for you. So whenever something is not clear, then just let me know. British pound CAD, this looks much, much better, I think. And here we have everything that we need. We had a high here in, yeah, opposite to the British pound Aussie. We didn't break above it. We still kind of made higher lows here, but you can see we didn't make a higher high. So we had the resistance cover here. I also, you can see we had a little bit already. When we zoom in, you can see that we had here the hanging man. You can see the wick to the downside. Then you can see here the next candle quite bearish, another bearish candle that broke the one previously. Here you can see another rejection to the top, and we had some bearishness coming into the market. On the lower time frame, what we have is a good pattern. I think you could have already made the case for getting in here last week. So breakout, it's all, I think maybe, have you seen it last in the Discord? I'm not sure. We had the breakout and the retest. I think overall you could have played it here as well. Nothing wrong, but you can see we get another really, really perfect retest. This is, you can see it very light. here in light red. This is the weekly pivot. We are coming back into it. Strong resistance with the previous support here. The market moves into it. You can see kind of a triple tap even. We have some fake out component. And then you can see here, we have the very strong 2-candle bearish reaction, which is exactly what I want. I'm not such a big fan. I don't feel comfortable. I know that other traders will have resting pending orders somewhere up here. I'm never super confident with them. If you are one of them and you feel confident, you may be able to get a much higher reward to risk ratio. The drawdown is then obviously sometimes the market just brushes through it, but yeah, nothing works 100%. If you watch the course, there's always a drawdown and a trade-off between early entry, reward to risk ratio, and win rate. So I think that's natural. We break this little flag here, which is a little bit more obvious on the 30-minute, obviously. We have this double top fake out, very strong breakout. We do break the daily pivot, but at this point, I'm not super concerned about the daily pivot because everything else looks just so nice. We have the higher time frame deceleration already at the level. We had the breakout, the retest, and then you can see I held it over the weekend. I'm sure I remember quite clearly some traders took it as well in the Discord. Yeah, very nice outcome Monday morning, just gapped lower, jumped into the target. Maybe got lucky here on the target. The market turned around shortly after. My rationale for the target was down here is a very important level. Was not sure. Usually I don't draw it at the low, but more of a zone. So in here is somewhere the zone, and I never put my target at the zones. I always have it, like in the case of the Aussie yen, a little bit higher. So that's how I played it. Reward to risk ratio again 3. I try to go usually for at least 2 to 1. Preferably, I would like to get a 3 to 1 reward to risk ratio. I will never squeeze my stop loss, which is something that many traders, in my opinion, do incorrectly. They first start with the reward to risk ratio in mind that they want to have, and then they try to squeeze in their trade. I look for, okay, where's a reasonable stop loss first and foremost. In this case, reasonable stop loss above the highs here, the breakout candle, not above the highs, but above the breakout candle here that got you out of this short-term trend line. And I think overall, fairly decent stop loss. At this point, I don't expect another retest because this is already here. The retest number 1, 2, this would have been retest number 3. I would not expect that, of course, could happen. But overall, yeah, 3 to 1 is good. And yeah, I think overall a decent one. Kiwi, I think it's a good trade. Yeah, let's just break it down. Daily chart. So what we have here is a very big support level that is turning into resistance. I was planning to play the resistance touch to the downside. With the benefit of hindsight, obviously, now we see the market broke out. We could say this is an reverse head and shoulder, right? Could be, but for overall, I think, okay, I wanted to play it. I didn't want to stretch my target too far. I was not going for a huge trade, but just a small reaction here of the resistance. You could say, okay, maybe the resistance was already used up and the higher lows here are indicating more bullishness. Could be the case. I think overall it's still a fair trade. Let me just, this is distorting it a little bit. So we had here, very similar to the Aussie yen, it's one of my favorite setups. You have the clear sideways range, right? So this is the higher time frame level. I just get it off for clarity. So we have the clear support level. We have the clear high here. Then we have the breakout. I didn't take the breakout. I wait for the market to get back here inside the pattern. I didn't want to get in here. I wanted to see a little bit more bearishness. So I got in here. We cleared the pattern. We came back below the support level. So at this point, looks quite identical to the Aussie yen, right? Stop above this high, not above the dirty retest high. I think overall fair stop loss, but obviously it didn't work out at all. The market just a few candles later brushed through it, retested the highs, had a nice lower bounce, and now obviously we're trading above it. So yeah, didn't work out, but I think overall still a great setup. I think if you're looking for something to criticize, the higher time frame could be said it's not the most bearish setup of all times, but I think overall it's still acceptable to take this one. Then here we have, again, we have the setup, as you will see on the lower time frame, is very, very similar, but the higher time frame here is obviously very different. And here on the higher time frame, what we have is already the lower highs here. So here the US dollar CAD made lower highs already. Then we had some good bearish momentum. We have a very good resistance turning into support level, right? Very good level here, clear level, very objective, easy to identify. So I was looking for a move outside of the pattern and a bearish push. Then the setup, let me go to 1 hour. I think, yeah, I should be able to see it even if I squeeze it a little bit. So here's the level, resistance turning to support. We had the breakout, we moved back into the pattern. Coincidentally, we retest the daily pivot. I would, even if we don't retest the daily pivot, it's still a very great setup overall. Then you can see the strong bearishness coming back, confirming here that there is this dirty retest, fishing for the stops, going for the liquidity. And then again, 3-to-1 reward to risk ratio. There is some levels down here. There's also something in here. You can see that. I didn't expect this to be a huge problem. In the end, there was a little bit of back and forth around it, but again, 3-to-1 is something that I will be always happy to take if I can get 3-to-1. Very happy with that. And yeah, again, this is, I would say, maybe my bread and butter setup. US dollar CAD, British pound CAD, Aussie yen, all followed pretty much exactly the same principles. The only difference, I think, between the ones that did work out and didn't work out is, I think, the higher time frame confirmation or agreement or disagreement in some instances, like the Kiwi and the British pound Aussie. The higher time frame was not as great as it could have been. That could be the reason, but yeah, I'm really happy to take those trades over and over again. With a 3-to-1, you can be right 30% of the time, 40% of the time, and still end up with a good result. So I think overall, nothing to complain here with those. So those are my recent trades. 1, 2, 3, 4, 5 trades. Yeah. Trading stop loss. Yeah, I would like to get my stop loss. Well, so it's really dependent on the situation. News-wise, when there's a big news announcement coming out, as I explained in the course, if the price is very close to my target and there's a big news event, I will close my trade typically because the dynamic reward to risk ratio is just not in your favor. If I'm not in front of my charts for an extended period of time, meaning if I'm in bed or if I go to sleep, then I would also like to trail my stop loss. I'm not a big fan of trailing aggressively. I've just had never good results trailing it aggressively, but I will move it a little bit closer away from my initial stop loss just to reduce the risk slightly. That helps. On the British pound CAD, Hendrik example, you had the trade open over the weekend and it gapped into your favor. But what happens when the price gaps beyond your stop loss? Will the trade keep generating loss until you stop it manually, or do the brokers have some process in place that to trade? So usually when it happens is that when it gaps against you, you will be out at the first accessible price. So yeah, it's going to be beyond your stop loss. You don't have to wait until the market reaches your stop loss once again. So this is typically how it goes. If there's a very big event, such as, well, yeah, the last recent one was obviously the oil glitch, then you have to wait until there's some liquidity. But in such a case, very straightforward, just a regular gap. Then if it gaps beyond your stop loss, you will be taken out for that price, typically when it opens, or at least relatively close to the stop loss, to the gap, sorry. And yes, this is the right question, right place. In the webinars, I like to discuss everything that is on your mind. For now, we are not a very big group in here in the webinars, so you can really make use of that. Yeah, I'm very happy to cater to your personal questions, situations. Yeah, I think you get the most out of it if you just ask what is on your mind. So those are my recent trades. What we could be doing now is go over current charts and break them down, top down together to see what is coming up. If you have any particular charts that you would like me to start with, that you are maybe watching and you're unsure, let me know which one that is. CAD yen, yes. Any preferred time frame? Which time frame are you looking at? So that I have a reference. 1 hour, okay. I don't, yeah, it's not on my regular list, but let's take a look. All right, so let's start with I always like to start with a higher time frame. Let's get rid of all of this. Nice deceleration. Beautiful here, yesterday's engulfing candle, right? Very, very bearish bias. I would go into today with a bearish bias. Looks already, we are continuing lower. Yeah, we had this one drawn, I remember. Triple tap here at the high. So if you have, do I have it? Yeah. Slight divergence. You can see the RSI didn't go higher. So yeah, clear slight divergence. We're still trading above the weekly pivot point. You can see it here. The daily pivot point structure has changed, right? Here, here, and now we are trading below it. Good. All right, so level-wise, as I said in Discord and in the videos, I'm not a big fan of trading trend lines. I always look for horizontal levels instead. So yeah, I think this was, so are you already in this or not? We didn't have a dirty retest, obviously, but we retested kind of those lows. Yeah, so if you're not in it, then yeah, obviously now you would be chasing it. If you are, I'm not sure, are you trading the retest or would you be waiting for the market to retest this one, I guess? Overall, when I look at this, I see a very clear bearish bias on the daily time frame, right? Very clear bearish structure, overall bearish sentiment. Yeah, that would be also the only thing that obviously when I look at a chart, I ask myself, do I want to be bullish? Do I want to be bearish? Or is this a neutral chart? Obviously, I don't want to be bullish here at all. It's also not very neutral. I would like to be bearish or get into, I am bearish and I would like to get into a short. But does it make sense right now? I don't think so. Yeah, if you're waiting for the retest, then yeah, the daily pivot offers itself here. Obviously, now it doesn't look very much like a possible retest, but this can change very quickly. So yeah, I think this makes for a reasonable trading plan. Yeah, that's the only thing that I think we can get away with right now that would make sense. Yeah, so you definitely need some patience with that. US dollar CAD 1 hour, Hendrik, my pleasure. Let's clear this. Yeah, I was looking at this as well, right? There is some demand here on the daily time frame. You can see some level is here as well, highs, demand. We had this deceleration, strong bearishness. Then yesterday, yeah, not quite an inside bar because we took out the previous lows, but just by a tiny margin. And now today we are rallying higher. Looks good. Again, just like my rationale on the Aussie yen, we would be going a little bit against the higher time frame trend. So if I would be looking for an opportunity here on a bullish side, I would be very cautious and I would not go for a very large target just because I wouldn't expect a lot of bullishness. On the lower time frame, I was looking at this earlier today. We don't have a resistance level here, which is unfortunate. So I typically avoid trading markets where you don't have a clear horizontal level. You have a swing here, but that's pretty much it. We have here the fake out. We have a higher low. The market is making a run at it. So what I would be waiting if I look for bullishness here, something like that. Again, I think that's the only reasonable thing to do here because we don't have a level that we can work with. I usually only like to trade markets where you have a good, well-defined horizontal level, at least 2 touches, which we don't have in this case here. But yeah, On the bearish side, I'm not sure if you're looking for bearishness. If you're looking for bearishness, I would wait for the market to make a much deeper pullback, because you can see we're coming from this huge bearish rally sell-off. 1, 2, 3, 4. Yeah. So more than 1 week of aggressive selling. So going short, I would not feel very comfortable. I would feel chasing the market. So what I would wait for if I would be getting in or looking for a short, first, something like a relief rally, you can expect that a lot of traders who were short here are looking for taking profits, especially it's Wednesday. So we have pretty much only 1.5 trading days left. Friday is for most people a bank holiday. So yeah, what you often see is that going into such a period, you often see profit taking as well. Nobody wants to hold into the holidays. So yeah, not sure. Can we get all the way up here and then look for a short? Obviously, this would be predicting. I don't know, but I just know that for bearishness, I would not feel very comfortable looking for shorts right now. I would need for the market to give us a much better price, much higher price. Yeah, I think right now, as we're speaking, I think the bullish side makes the most sense. Just the lower time frame. I don't like patterns, or I don't like markets where we don't have a clear pattern, and a single horizontal touch point is not enough. We need at least 2. We could still get one. We could see a turnaround and then turn this into a second one. So first, second, and then maybe, who knows? It looks like the market is making a run at it. So yeah, I think overall the bullish scenario is the one that it makes the most sense right now. We have the trend line here, but I'm not a huge trend line fan. But definitely an interesting one. Yeah, that's definitely one to watch for today. Let me clear those. Yeah, definitely an interesting one. Okay, what else do we have? Why do I have to mark this? Okay, yeah, Euro Aussie. I'm looking at this one. There's some really interesting higher time frames. So this is the daily chart. Really nice higher time frame confluence. You can see this is the first level, and then here's a big one above it. The market is making a run at it. We are still making clearly higher lows and higher highs, right? No question about that. We had a little bit of the tweezer here, then the short-term sell-off, but we're back at it. The market is often drawn into those big levels. It's the 165 round number. So those areas also, those significant highs and lows, all time, well, not all time, but historic monthly, yearly highs and lows, they have such a strong gravity pull towards them that you will often see market being pulled into those. It's really interesting to see. So yeah, I'm wanting to see what happens here. Would you feel comfortable trading maybe a break and retest? You don't have a lot of room to the upside, right? Because the next 165 is already waiting there with the big one. But yeah, overall, really, really nice, interesting area for the higher time frame to watch. Not for today, but down the road. Any other markets that you're watching? That's an interesting one, huh? I'm not sure what to do with this. British pound, US dollar. We broke out. We broke out today. So I would like to see, will this hold? Will we see resistance, turn into support? We don't know yet, obviously, but it's definitely something to keep an eye on. So not for now, but we'll see. I will definitely, those are always markets that I feel interested in, and just keep an eye on them. Euro, New Zealand. Let's do that. Oops. Daily. Interesting. You feel the highs, the lows. Already lots of movement here early on. Yeah, with this tight range here, we fish for the stops. We can see breakout, but the market snapped back. For now, obviously, this day is only halfway done. We still have a lot of more time to go here. I'm not sure what to look for at this point. Bullish, I would not feel super bullish below 175. And bearish, I'm not sure I would feel bearish seeing this. You would only have maybe maximum here potential to the trend line, but you have already here quite some rejection early on. Very volatile. Could be a dirty retest pattern, right? We are on the 1 hour, it looks actually more interesting than on the daily. We have the level here, the pullback, but for dirty retest, we need a strong bearish momentum come back into the market. We have here already here the indication of lower highs. That's good, interesting. Yeah, I think on the lower time, but again, on the lower time, if you play the dirty retest, this is the trend line here. Where is it? Here. I can see there's not a lot of room here to the downside. Right. Yeah, so those don't have, you don't have a lot of space to get in a good reward to risk ratio. Don't forget Friday, bank holiday in Europe for the most part. Your US dollar, let's take a look. Here also we are just, this is interesting, obviously. We just covered the high here yesterday. Here the tweezer. Then here rejection, you can see bullish, bearish, bullish. Then yesterday here, take out the high. So yeah, can the market be pulled into here the high? Or is this going to be a fake out actually? Often you see fake outs, obviously. Right now it's way too early to tell, but this is one of the markets that I definitely keep an eye on. Whenever we take out highs, I will be there to watch it. On the lower time frame, yeah, we can't do much now. We don't have a pattern. We don't have a level, but it's early anyway. It's one of the more interesting ones. We had a lot of trade setups early on in the week, so the markets are probably getting ready for holiday now. That's why we don't see much. You can see a lot of consolidations, indices, bullish. Lots of congestion here, lots of noise. Anything else that you are watching, or? Yeah, that's not too bad. What I don't like about those, you have the crazy wick here, very strong rejection at the highs, but you would be trading right into this, very noisy. You can see in the middle of the range, you often have those big levels as well. So you have the middle of the range, the bottom of the range. Yeah, the middle of the range could be here a very big issue here for this one. So trading inside of those ranges is a little bit more risky, I would say. Could be a head and shoulder building, maybe dirty retest here, dirty retest here, then the right shoulder breakout. That could be maybe something. Oops, let's leave that on. Maybe. How to say? Lots of congestion on the Forex higher time frames. This is quite interesting. We're getting here accelerated after the breakout here. Maybe break and retest. Footprint, no, I don't think so. I've never spent a lot of time with footprint charts. Maybe an indicator. Yeah, I don't think this makes too much sense. I guess I'm not sure what you have to do here to make this work. No, I never spent time looking into this. Ah, okay, fair enough. No. By the way, this is this concept here, which I talked about in Discord last week, I think, about the wicks, that you should not always be scared of wicks. There's this concept. I think Linda Rushke talked about this. I think she calls it eat the wick or eat the tail or something. When a market takes out a wick, a strong pin bar wick, and then closes above it, she uses it as, I think, on the lower time frames as kind of a momentum confirmation signal, which I think is really interesting. Also, what I like about this, and I talked about this years ago already on YouTube, is that a lot of traders are very scared of wicks on the charts and have a wrong understanding, or maybe not quite wrong, but insufficient understanding. Wicks don't always necessarily show just rejections, but they can also be an indication that the market pushed quite high. Of course, we didn't close there yet, but it could be a precursor for more bullishness to come if we take out the wick. So wicks should not be something to generally scare you out of a trade, or should not be in general something scary. Or there's often more to it than just this binary approach. Other than that, I'm not sure. Is US dollar, maybe the US is waiting for NFP day. Europe is, I think, getting ready for the weekend. I think we do have a bank holiday, well, definitely on Monday as well, yeah. So, okay, even in Australia, British pound, Switzerland, Europe, France, Germany, Italy, okay. So yeah, Friday, Monday, long weekend, obviously then. That's why you probably don't expect a lot of more movements, maybe short term in the NFP, but I wouldn't expect fireworks